Okay, yes, so we'll start off with financial administration. So as the very term itself says, when I say financial administration, what does it talk about? Talk about money. Okay, so finances or money management is what this is all about. Okay, so now financial administration is known as the lifeblood of the public administration. Okay, if an administration is managing its finances well, then it means that there is going to be good public administration largely. Okay, na? So finance is like, very significant area of public administration. So now when we talk about financial administration, we are going to talk in terms of the financial administration of public administration. Okay, so government organizations, how they take to financial administration. So like, whatever topics we are seeing here, no, yesterday also personal management, it was largely about generally what personal management is. Then when it comes to governmental setup or public administration, how you can bring in the necessary changes or information. You get this? Yes. So now let's take a look at it. Financial administration refers to that set of activities which are related to making available money to the various branches of an office or an organization to enable it to carrying out its objectives. So as simple as that, allocation of resources, financial resources to different branches of an organization. Okay, so is it just about allocation? There are so many other things. Okay, so firstly, you have to estimate. Estimation has to happen. Okay, so for estimation, you need to have forecasting. Okay, so then comes your estimation, then comes allocation. After allocation, what do? It's called auditing. Okay, so you go for auditing. Okay, and then if you find that the finances are not being rightly used, then you go for corrective actions. So this is your financial administration. It is not just, this is like very gross idea about financial administration. So what does our LD White say? Fiscal management includes those operations designed to, don't write this, just wait. So those operations designed to make funds available to officials and to ensure their lawful and efficient use. So now, when we talk about financial policy of India or financial administration of India, we have two types of policies. So this is fiscal policy and this is our monetary policy. Okay, Megha, do you know what is a fiscal policy? So fiscal policy is nothing but you formulate the policies and programs for the citizens. Okay, and then you decide about which are the areas that you are going to spend money on and which are the areas that you are going to get returns from. So the government's income and expenditure is discussed by the necessary officials in fiscal policy, and it's totally a government's function. Okay, so now when we have something called as fiscal policy, what was the necessity to have a monetary policy? So primarily, there has to be a regulator for the government also, right? So to counter check the programs and policies and its financial, developments, we have this monetary policy. Okay, so there is this central bank. Okay, central bank, every country has its central bank. Okay, so what do I mean when I say central bank? It is the apex bank that is responsible for the regulation of money. Okay, so totally it works towards the regulation of money flow, right? So now what is the demand of one particular currency and then or for any particular thing, okay, instrument, financial instrument, and how to regulate it. Okay, so why did we go for demonetization policy? Give me some more examples. Interest rates, okay, that's little, okay, if you feel that, revenue collection, okay, then the other side, like, talk about control inflation, okay, and then we have something called as interest rates. Yes, so you have repo, reverse repo, and then we have so many other adjustment facilities. Okay, so primarily the amount that can be circulated in the economy will be decided by the RBI. Okay, but that is by through monetary policy. Okay, so now the difference is clear, I hope. So here this is in the level of government and this is on the central bank's viewpoint, and then primarily they regulate the money supply in the market. Okay, so now if the interest rates are high, there will be less borrowing. Okay, so now when there is less borrowing, what happens? The money in people's hand will reduce. So when the money in people's hand reduces, their consumption reduces. So when the consumption reduces, demand reduces. When the demand reduces, the product price will come down. Do you understand? So RBI sitting somewhere does something, and we final consumers are feeling the heat of it. So that's the beauty of economy. Right? Yes. So regulating is so very important, and this is our structure when it comes to our public financial administration. Okay, when I say public financial administration, I'm talking about governments. Okay, now so here LD White says fiscal management. That means he's talking about the government's financial administration. So fiscal management includes those operations designed to make funds available to officials and to ensure their lawful and efficient use. So this is what we do, Arla. Under fiscal policy, what do? We look at the money available and then we allocate for different officials. Now here officials means different ministries, and people involved in the execution will be given funds. Yes. Then financial administration became an instrument of modern governments for making popular sovereignty a social reality. So what is this? What is popular sovereignty? People being the ultimate decision makers, right? So now the governments around are, using this financial administration as a tool for ensuring people's decision coming to the final, decision making level, to a reality. That's what they're trying to say. How financial administration is coming here, how people's opinions are resonated here. Election. Yeah, and also in the election manifesto, what do they say? Okay, this government increased the petrol prices to so much. Okay, so they directly connect to money being spent by the people on different products, basic products, right? So now they try to attack on the expenditures that the common people will have to take to for their day-to-day life. Okay, so now financial administration is like, one of the tools that every government is using to bring in more, like, people's voice inside the administration. Okay, so now they try to appeal to different people, okay, different section of the society, stating that we will give this reforms, we will give that reforms, we will try to reduce the price of this particular article, okay, or we'll give more subsidies. Okay, so different kind of, what do you can't call it as like bait, but you can call it as like, different kind of provisions are given for different kind of, different sections of the society, so that everybody is appealed or everybody is pacified about choosing the next leaders. Okay, therefore financial administration is very important in the setting up of the government, is what they're trying to say here. Okay, so people's decisions strongly vary when their financial condition is stubborn or like, strained. You get it? Yes. So that's what they're trying to say by they're using this for turning the popular sovereignty into a social reality. So now whoever gives more reforms, whoever is like, doing much of, contribution for welfareistic society, they are going to be chosen again. Right? You get it? So that's the relevance of public financial administration in our public class. Right? Yes. So moving ahead, the components of financial administration. So as an outcome of integrated approach, the following aspects emerge as the core areas of financial administration. So what is this integrated approach they're talking about? Okay, so when I say integrated approach, like, all the components of the administration will have to be treated alike for best outcome. Okay, could be a political environment, could be economic environment, could be financial, or could be social. When you put all the components or different factors under one umbrella, then it becomes an integrated approach or a comprehensive approach. Okay, so it's important to use such terms. Okay, yes. So first one is financial planning. So first component of financial administration is financial planning. So planning includes laying out a framework, future course of actions. Then comes budgeting. What is budgeting? Drafting. Okay, you're just estimating. Okay, you're going for estimations. You estimate, you develop estimations, and then you also plan for allocation. You plan for allocation. Okay. And then comes resource mobilization. So now what is this resource mobilization? No, not just required. Like, you're bringing in all the resources together, right? So for putting this plan into action, we need a lot of resources. It could be the manpower, it could be the technical expertise, or it could be the materials, raw materials involved, a lot of things. Okay. So now you bring in all the resources, all necessary resources at one place. That is resource mobilization. Then comes investment decisions. Okay. So what is investment decisions? Now that you have a plan, now that you also know how much money is required for it, and now that you've also got the information of number of people to be involved, or the amount of resources to be involved in it, now you make investment decisions. Okay. So now is it viable to make the investment in some particular project? Okay. So feasibility of the project is not just feasibility, but also profitability. Okay. And then after you have decided to invest in one particular area, then you go for expenditure control. What is expenditure control? The project is going on, and then there is delay in the project, and then there is wastage of resources, and then there is change in the plan. We need to be having a flexible plan. A lot of variable factors come into the picture. Okay, so few are like invariable factors in the production, few are variable factors, and few are non-variable factors. Okay, so non-variable factors are like standard. Okay, could be your infrastructure based developments that you've made, investments that you've decided to make. They are all like little non-variable. Okay, but when it comes to variable, the market environment, costs of the product, and your environment of the economic cycle, everything matters. Okay, so now expenditure has to be controlled. Okay, so you see if there are any deviations in spending. You see if there are any deviations in spending. So if you find any deviations, then you are going to control it. And then accounting, reporting, and auditing. Now clearly give me the difference between each one of them. All three are different. Accounting is different from reporting, and reporting is different from auditing. What are they? You just, you have business standards, alva. Now, in normal terms, okay, Vaga, somebody is, adding money into your bank account. What do you say? Credited. And we say debited when it is taken out, right? So, for recording the transactions in financial parlance, there is a standard. Okay. So, business standards prakarane, they have to save the data. That is called as accounting. Okay. So, they have to develop various documents. Okay, so firstly, they have to develop various accounts. They have to put the debit and credit, and then develop the trade balance, and then they come up with balance sheet, and finally they put everything that has been happening in transactions in black and white. Okay, now that is nothing but your accounting. Recording of transactions in a account standards is known as accounting, or according to the business standards is known as accounting. Okay, now what is reporting? Reporting the recorded transactions to necessary experts or seniors. Necessary officials or experts anta helbodu. Okay. You report. You intimate to the required officials in the organizational structure. That is nothing but reporting. So reporting has a lot of significance because accounting is just the recording of data. Unless the recorded data is communicated to the required personnel, it is not going to come up with any kind of impact in the organization. So reporting is really, really important. Okay. So in financial administration, reporting is different. What is reporting? In financial parlance, whatever the transactions are recorded here, they are analyzed and developed into reports. Okay. These transactions are analyzed and the reports are released. Okay. Then comes your last one, that is your audit. So what is auditing? Auditing is nothing but the post-mortem work of whatever has been done so far. Okay. So they call it as, they scrutinize the reports submitted. Okay. So now in the audit, you figure out how much deviations are there. Okay. So we are trying to avoid the leakage and deviations in every step. Despite that, finally when auditor comes only, everything comes out, isn't it? Yes or no? So when there is like, annual audit in offices, people will just, literally be running around to know where the money came from and where did the money go, right? So it's really important to have track of the inflows and outflows, right? So auditing finally comes up with a final statement stating that what was the sources and what were the expenditures, and finally what is the credible position of the organization. Got it? Yes. So that's about auditing. So these are the components of financial administration. Okay, so firstly there is planning, and then there is budgeting, and then there is resource mobilization, then there is investment decision, then expenditure control, and lastly it is accounting, reporting, and auditing. You can split it into different components again, or write it as same. Did you understand? Yes. So these are the components of financial administration in general. Okay. So Indian financial administration's components are these. That is fiscal policy and monetary policy, which we have discussed already.